What's up, Fired Up Wealth? Another big week, and there's really two primary things to be watching this week. Fed Chair Jerome Powell is going to give commentary at Jackson Hole on August 25th, and that's Friday. And then, of course, we have Nvidia earnings. It's going to be on this Wednesday after market close. In this video today, let's look at Nvidia. Let's do an Nvidia earnings preview, see where the stock's at, look at valuation, possibilities for the stock, some predictions for the stock, also look at a chart and show you some different price levels where it could go. I think most people would agree that Nvidia's earnings really will predict what happens next with the market. A lot of the gains in 2023 year to date, it really comes down to that AI hype train. Now, some of this is definitely legitimate, and the question is where are these stocks valued at? Like, what is Nvidia valued at? So Nvidia and these big cap tech stocks, these mega cap tech stocks, have really driven the market higher off the AI buzz. And if Nvidia comes in light, if there's any sort of sneeze at all, you could see a market sell-off, and you could see that sell-off really accelerate and snowball. So investors and analysts, I think most people agree that Nvidia is probably going to have a solid earnings report. We're expecting a beat on both and a raise in guidance. The question is, how much? Nvidia shares have tripled in 2023, adding more than $700 billion in market cap to make it the first $1 trillion chip stock. Now, I think where that gets interesting is you look at an infographic like this. Now, this is showing you total addressable market for chips, $940 billion in 2030. But this does not include software. And if you've been paying attention to the channel, Nvidia is really pivoting more into AI as a service, really as a software as a service type model. And of course, the software is not going to be represented on this total addressable market. I've been investing in tech stocks since the late 1990s, and I don't recall a time in 25 years of investing where the entire direction of the market really depends on one earnings report. If Nvidia misses at all, it's going to cause shockwaves through the market. If you think about it, AI is really the last pillar of growth that people are clinging onto. And if we lose that hope, it could be bad news for the stock market. Now, this is another thing I don't recall in 25 years of investing, just how the analysts are all over the board right now. I was looking at 15 different sites and getting 15 different pieces of information. These numbers are all across the board. There doesn't seem to be one consistent number on anything that I read. This particular quote, Wall Street expects the chip company to guide for a rise of about 110% in the third quarter revenue to $12.5 billion. Nvidia has only forecast revenue below estimates once in the past 2 years. And you can see Citi analysts said that this week they're modeling revenue forecasts around $12 billion. But the buy side expectations have gone up to $14 billion. And at least 10 different firms, analysts have raised price targets just in the last week. The new median is $500 a share, which is about 15.5% higher than the close on Friday. So you're seeing the stock green today. Now, this is where it gets really sketchy because people look at PE ratio. Well, that's going to be 12 months trailing. So we look at forward PE, but a forward PE is really trying to estimate what that guidance and revenue expectations are going to be. And those numbers are all across the board. So while the company's 12-month forward price to earnings ratio soared dramatically to more than 80 in its second quarter revenue forecast at over 50% growth in May, it has come down since analysts have raised their earnings expectations. It now trades nearly 40 times the consensus earnings for the next 12 months. And that's higher, of course, than AMD's 29. But Nvidia has been crushing it on earnings. AMD's last earnings report wasn't all that great. So, of course, all eyes are going to be on these AI chips, the data center unit H100 chips. And here's another clip from Forbes. And this is what I'm saying. The numbers are all over the place. The current share price in trailing 12 months of earnings equate to a P ratio of 222. And that's well above the company's 5-year average, which is 73. But probably for good reason. The question is where do you value the thing? Investors are pricing in much stronger earnings going forward, but even the forward PE ratio is more than 30% higher than Nvidia's 5-year average. Well, maybe it should be 30% higher based on this huge secular tailwind, this secular growth trend that we're seeing. So this is where it gets interesting and really the drama starts. The PE ratio, 236. Well, that's 12 months trailing. Now, the forward PE ratio based on Y charts is 55.5, but earlier on the slide, we saw 40. And I've seen projections anywhere from 60 to 25 for the forward PE. Of course, the forward PE is an estimate, and the estimates are all over the place. So just for fun, I added the forward price to sales ratio according to Y charts here, 25.5. You can see where this is polarizing. Because you can look at it and say, well, according to my estimates, it's only a 30 forward PE ratio. So if you're buying as a long-term investment, it's a good long-term investment. Or you could easily say, well, this is a 238 PE ratio and you've got risk with China and that drop off we talked about. And the price to sales ratio, even on a forward price to sales ratio is 25, which is ridiculous. And so the drama continues. And what decides what happens next for Nvidia and probably the fate of the market? Earnings Wednesday night. This is just this morning. HSBC adjusts price target to $780 per share from $600 and maintains a buy rating. Now you can see down here the price ranges are from $211.67 all the way to a street high of $1,000 per share. And remember, this is trading at $450 right now, and it's over $1 trillion market cap. So at $1,000 a share, you're talking well over a $2 trillion market cap. So this HSBC analyst is Frank Lee, who notes that despite higher expectations, there's still earnings upside that's not fully priced in yet for the second half of fiscal 2024 and fiscal 2025. But definitely keep watching this video because we're going to talk a little bit more about that and some of the risks. KeyBank analyst raises price target to $620 after previously boosting it in July. They just keep popping these price targets higher and higher, noting that the unmatched company is likely to surge past estimates. There's not a lot of stocks I can recall covered in the last 25 years that really have the buzz around what Nvidia's got right now. So Wedbush Securities' Dan Ives, who called CEO Jensen Huang the godfather of AI, said the results are highly anticipated, especially given the fact that tech stocks have been shaky after 2Q results. So check this out. Stock at $457, up 5.62% right now. 42 analysts are covering this stock, and it has a high of $1,000, low here of $392. So you're talking about the low being 13% lower than now, the high being 120% upside. You don't see stuff like this very often, especially with $1 trillion market caps. So you've got 36 buy ratings, 7 outperform, 6 hold, and 1 underperform. Now, of course, you never buy a stock solely off analyst recommendations, but I think it's interesting just to look at the data and try to get an idea of sentiment. Now, according to this source, we got earnings per share, $2.06, and sales, $11.1 billion. So again, these numbers do vary depending on the site. So going back to Dan Ives, this is a quote. "We expect a bullish outlook from Nvidia that should be the fuel in the engine to continue this tech rally into the rest of the year." And this is despite the tough talking Fed with Jackson Hole Powell coming this Friday. Well, that's a bold statement. We'll see what happens. There's certainly a lot of macroeconomic risks right now. We've talked about some of them on the channel. Credit card debt, you're talking about treasury yields, interest rates, inflation. We won't go down that rabbit hole right now, but there are a lot of risks in the market. And if you look at stocks and where they're valued, you could easily make a bear case or a bull case in this spot. We're at a 50-50 ball, and I think Nvidia decides what happens next. Okay, so analysts expect Nvidia to report sizable growth in revenue and EPS. The consensus estimate for revenue is $11.1 billion, up from $6.7 billion in the year ago quarter. That's a big jump. That translates into a 65% year-over-year sales growth. And you're talking about a large company. This is a big number. Now later we're going to look a little bit closer at valuation and specifically a chart, and I'm going to show you what could happen. The consensus estimate for revenue is within the company's second quarter outlook reported in May. At that time, the company expected second quarter revenues between $10.78 and $11.22 billion. The consensus EPS for the second quarter is $2.07, which would be a 305% increase over the second quarter 2023 EPS of 51 cents. So what are some risks? And this is important to pay attention to here. And I honestly think that this is being missed by a lot of analysts. It's hard to measure it. It's really hard to measure this and try to figure out what numbers we should be using and what the valuation should be. So Biden orders a ban on certain US tech investments in China. We know this, right? So this is to stop Chinese entities in 3 primary sectors: semiconductors, quantum, and AI. So what we've seen these Chinese internet giants basically order a bunch of chips in fears that they won't be able to order them in the future. So they're stockpiling. Now, if you remember in 2022, we had similar issues where we had supply chain constraints and businesses started to stockpile, and that impacted companies like AMD and Nvidia on their earnings results. So $5 billion worth of AI chips, that's a big number, and there's going to be some pull through there. So you've got companies like Alibaba, Baidu, ByteDance, which is TikTok, Tencent. They have made orders worth $1 billion, about 100,000 A800 processors. So this is not the most recent technology. They're ordering the older technology, really in fears that we're going to continue to press this legislation and make these not available as well. The company's also bought an additional $4 billion of the graphics processing units to be delivered in 2024. So you're going to have some pull through in 2023 as well as 2024. But what does it look like on the other side? The other question that we don't have a solid answer to, Taiwan Semiconductor has to manufacture these. You know, Nvidia is a fabless semiconductor company. They're going to send these designs off to that foundry, Taiwan Semiconductor, and can Taiwan Semiconductor keep up with the demand? So Chinese companies are rushing to stockpile the A800 chips over fears that the US is mulling new export restrictions, which would include even Nvidia's weakened chips, meaning their older models. So ByteDance, owner of TikTok, has stockpiled at least 10,000 Nvidia GPUs to further its ambitions. The company has also ordered about 70,000 of these A800 chips. This is worth $700 million to be delivered next year. And this is going to be for generative AI features on TikTok, their app. So the question is, what does this look like longer term? At some point, that demand's going to fall off. And so you're going to have pull through and you're going to have stockpiling. And then at some point, it's going to taper off and fall off a cliff. So the big question here, what happens next? You obviously have some pull through here. And at some point, that demand's going to probably fall off a cliff. Even if there aren't additional restrictions on those A800 chips, they're already stockpiled $5 billion worth. And so they're not going to have much demand. They're not going to have as much need after that 2024 delivery. This could create a problem. And you can make an argument that, well, NVIDIA is not going to have a problem with demand from other businesses in other countries. But you could also make the bear case that this will be an issue. At some point, you're going to have basically really hard comps. So what happens is the stock price will probably keep going higher. It's going to plateau at some point, probably pull back. The question is where, and then it's going to trade in a range. And it can trade in a range for a couple of years sometimes when you see stock moves like this. So stay tuned. We're going to look at a couple more things here and then a chart. Before I go on, if you're new here, subscribe to the channel, click that bell for notifications. If this video is helpful, drop me a like and drop me a comment. And I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community, Patreon Discord, by visiting patreon.com/firedupwealth. So the analyst consensus estimates for NVIDIA, and you see numbers in different places, but this is the one I saw the most here this morning when I prepped. $2.09 per share on 11.07 billion in revenue. And then the question is, what's the guidance? And NVIDIA is going to report Wednesday, August 23rd after market close. We're going to look at a chart here, so stay tuned. But drop me a comment below. What happens next? The short interest is only 1.11%. And that, of course, my friends, is telling you that not a lot of people have the cojones to step in front of this train. Now, here, price to book, 43.67. Of course, these are trailing metrics. PEG ratio, 10.64. You know, it's a $1.1 trillion market cap. Price to sales, this is not forward, but just the price to sales ratio, 41.39. Now, according to Fidelity, the PE for this year's estimate, 52.8. The PE for next year's estimate, 36.2. So next we're going to look at a chart. When you see these charts, we do chart day in Patreon Discord every single Wednesday at 9 o'clock a.m. Eastern live. If you see orange text, that's a previous chart day. Yellow is going to be today's information or today's chart day. And I've got some text written up here for you in yellow. Now, I've been long on Nvidia since 2018 in the 30s, and it's been my highest conviction stock for years. And I've been talking about AI in this channel for years. When this stock got to $150, I was like, $150, you know, this is a buy. When it got down here, 125 or less, I was pounding the table, and people were saying it could go to $80. I'm like, I don't care. 125 or less, pound the table. This stock got all the way down here to $108.13. Now, this was in October of 2022, and you know what happened since then. And this is about as parabolic as you're going to get, you know, adding $700 billion in market cap and flying all the way up here from $108 up to $480 a share. So you got this Fibonacci retracement, you've got these pivot points, moving averages. This is the 50-day simple moving average, the 100-day red, purple is going to be the 200-day. So this purple, this 200-day simple moving average is all the way down here below $280 a share. So if earnings are good and the stock rips higher, your R3 is at $521, and it could certainly go higher than that. You could see it probably $550, something like that. If there's a miss, the market sells off. If Nvidia misses and crashes hard after earnings, some of the numbers to look at on the downside, 378, 369, and 345. You can see it held support of about $401, $402 here recently. This 100-day simple moving average is going to be that $369 level, and then 345 is going to be this previous S3. So this is crazy. You've got the 200-day simple moving average at $279. And you've got the R3 up here at $521. That's a massive range. This video is not here to tell you like buy the stock, don't buy the stock. I think you have to wait for earnings and see what happens. Hopefully you already own the stock and you bought it at 150 or even less. If you missed that run up, you have to be careful here. At the same time, all these analysts are telling you it's going to be $700, $800, $1,000 a share. So as long as the momentum is positive, as long as they beat and they raise, as long as they don't completely whiff expectations, the market wants to take this stock higher. It doesn't necessarily mean that you should go buy it before earnings because it's a big risk. Bottom line, I'm bullish on Nvidia, but this is a very interesting spot here, and you certainly have to use caution. Do what's best for your money and conviction, but this is really to bring you just some possibilities, some analysis before earnings and earnings preview. I hope this was helpful. Make sure you drop me a like, drop me a comment. Have a great rest of your day. Take care.